Hi, I'm James, and in this video, we're gonna switch it up a bit. I'm gonna change the layout, change the structure, do something a bit different, and I'm gonna talk about what's happened this week in particular. So for the past couple of months, or maybe 2 months sort of thing, I've been talking a lot about Bitcoin, gold, and silver, and this has been a huge week for all three of these. I'm going to call them the triad, which I am super bullish on at the moment. So for example, gold has hit an all-time high in nominal dollar values this week. Silver has jumped 10% in 1 week, which is very dramatic. And Bitcoin has broken above 10,000 US dollars and is staying above that level around 11,000 USD at the time of me making this video. So that's been a resistance level for Bitcoin for the past few years, that $10,000 level. So this is sort of a very exciting week for me. The reason why I'm making this video today is a mate of mine, Sean, sent me a message and he said, hey James, Bitcoin's pumping, silver's pumping, gold's pumping, all these things that you were talking to me about a couple months ago, they're all happening. And he said, let me know when you want to start a hedge fund and I'm going to invest. I thought that was pretty funny. So thank you, Sean, if you're watching, and giving me the idea for this video as well. But, there's a great quote, which is, don't mistake a bull market for intelligence. So whilst, some of my investment plays this year have made me look like a freaking genius, in reality, there's nothing special about me. It's just, there's been a lot of opportunities this year, given all the disruption that we're seeing. It's times like this, uncertainty, where opportunity just is abound and presents itself if you're willing to take a few risks. All right, so when I was talking to Sean, after he sent me that message, he said, oh, I wish I'd gotten into crypto, a few months ago when you were talking about it. I was thinking about it and I thought, it's kind of like, and I said this to him, it's kind of like last year when Tesla, or maybe it was the year before, but when Tesla went from $150 a share to $200 a share, and all these people are like, oh no, I've missed out, Tesla's already jumped up, from $150 to $200 a share, I missed the opportunity. Well, hindsight tells a very different story, as we've seen Tesla this year hit around 1,600 US dollars a share, which is insane. But it kind of shows that, if the bigger picture factors are there, it's not as simple as, oh, it's moved 10%, I've missed out. There can still be a lot of room ahead and a lot of growth room ahead. Now for these triad, these three, gold, silver, Bitcoin, I am very confident, I'm very bullish, I should say, I'm very bullish on these three. And I'm gonna lay out in this video why that is. And even though all three have pumped this week, I really think that over the next few years, these three are going to absolutely shine. And the kind of macro factors that are tailwinds, pushing up the price of these three things, they're all in unison. So there's kind of these converging factors that I'm going to go over in this video and talk about those as to why I'm still super confident and why I'm still going to be buying these three into the future. I'm not sure when I'll stop. I'll figure that out as I go. I've got a little bit of an idea. But in the meantime, at the current valuations, I'm still very bullish on all three of these. All right, so let's jump into it. Okay, so I'm going to outline 6 reasons or 6 factors that I believe are tailwinds for gold, silver, Bitcoin. So to start this off, what we're going to do at number 1 is we're going to look at the historical data around both gold and silver and what happens to them in times of recession and uncertainty. So I'll put it up on screen here, but basically what you should be able to see now is that at each of these key recessions that have happened throughout history over the past 100 years, what's generally happened is that gold has rallied up in price. And that's because investors who are afraid about the value of their dollars, or for whatever reason, the uncertainty, investors look for safe haven assets. Now, historically, gold and silver have been perceived as safe haven assets and stores of value. So if you're someone with a lot of dollar value wealth, well, a crisis like this, where governments are just printing so much dollars and devaluing your currency, that can destroy a lot of your wealth that you've worked, your whole life to create. And so the incentive for someone like that in that kind of environment is to move to these store of value assets that preserve the wealth. So generally what's happened in these periods is that gold has rallied first. So gold tends to move a little bit slower, and maybe not immediately at the start of the recession, but sort of toward the back end of the recession. And so gold makes quite dramatic moves during these periods. And then generally after, what happens is silver slingshots and follows. As not only is silver primarily used as a store of value by investors, but it also has a utility demand. And I'm going to make a separate video just on silver, talking about some of the industrial uses for silver and why I am so bullish on silver still looking into the future. Now I'll put up on screen here the gold-silver ratio. So as we can see, throughout these periods where these key recessions have occurred and first gold has moved and then silver has followed, you see that at the start of the recession, the gold-silver ratio actually increases. And what the gold-silver ratio is it basically tells us, for every 1 unit of gold, how much silver does that buy? So the bigger this ratio is, the more valuable gold is with respect to silver, which can give us an indication that silver can be quite undervalued in these moments with respect to gold. And generally what happens toward the back end of these recessions is once silver goes, silver tends to reduce this gold-silver ratio to sometimes, at the most extreme example I could find, it was around 10, and then sort of more commonly around 20 or 30. Now, the current day gold-silver ratio today is around 80. So I made a video a couple months ago on the gold-silver ratio and why I was interested in buying gold and silver. And at the time it was around 100 or 120, that gold-silver ratio. But obviously silver has improved in price quite significantly since then, which has brought that gold-silver ratio down. But as we can see, with a gold-silver ratio still of 80 and gold with a lot more headroom still, as I'll discuss in the next point, there's a lot of upside in terms of the price appreciation for not only gold, but particularly silver. Okay, so point number 2, we're going to talk about the gold price. So this week, as I mentioned at the start of the video, gold has reached an all-time high in terms of nominal dollar value, which basically means the most expensive price it's ever been in terms of dollars. However, as we've discussed in other videos, if we look at inflation, well, the value of a dollar, 50, 100 years ago is a lot less than the value of a dollar today. Sorry, a lot more than the value of a dollar today. And so, our purchasing power of our dollars is a lot weaker than it used to be. And that will continue over time as reasons I've discussed in this video here. Now, despite gold hitting an all-time high this week in terms of nominal dollar value, we may be tempted to look at that and think, oh, that means gold is very expensive. Maybe it's not the right time to be buying an asset like this. However, if we look at gold with respect to inflation, or I should say adjusted for inflation, I'll put it up on screen here, but we can see that whilst in nominal dollar values, it's at its all-time high, but if we adjust that for inflation, we can actually see it's still got a lot of room to go ahead in terms of price appreciation based on previous recessions. And if we consider the severity of this particular recession that we're finding ourselves in, global economic lockdown, almost every single country's economy is shut down, we can infer that perhaps that ceiling level in terms of the potential price appreciation of gold could be greater than previous recessions. Okay, so the third part of this is around the central bank money printing, aka quantitative easing, quantitative easing, which I spoke about in this video here just last week. Now, it looks like that central banks, particularly the US Fed and the Australian Central Bank, the Reserve Bank of Australia, it looks as though the economic stimulus is going to continue into 2021. And so the runway for more money printing by the central banks, money print to go brr, that's looking to actually increase and extend beyond what we initially thought, which means there's going to be a lot more devaluing of our fiat currencies, so our Australian dollars and our US dollars. which means there's a lot more incentive for investors to actually transition some of their wealth from dollars into hard assets or store of value assets like gold, silver, Bitcoin. So the fourth reason, as outlined in George Gammon's recent video that inspired this, he talked about the bank reserves, which basically means the amount of cash that banks are holding in reserve and not lending out has actually increased quite dramatically this year. Now, the reason why banks would want to increase their excess reserves is as a measure of safety. So if you're uncertain about the future, and there are quite uncertain times, which we're seeing, then if you're a bank, you don't really want to be completely leveraged, meaning you don't want to have all of your cash lent out, such that if people get scared and they come to the bank to withdraw their deposits, all of a sudden, if you can't pay the deposits, the bank collapses. And so banks are actually holding a lot more cash on reserve in their bank accounts as a safety protection measure. Now, what this means is immediately, that isn't necessarily increasing the money supply and devaluing the dollars that exist. However, that's actually sitting there on the sidelines, ready to be lent out into the future. So we can expect that once we get a little bit more certainty and stability in the economy, that perhaps those banks are going to be, lending out that money more aggressively as they were before the crisis, which will once again have a huge increase on the money supply, which will increase inflation and devalue the currencies, Australian, US, fiat currencies, which is once again another very big, tailwind or upward price pressure on gold, silver, and Bitcoin, those kind of store of value assets. Okay, so part number 5, reason 5 is the weakening US dollar. So this week we saw the US dollar drop by around 2%. Now it doesn't sound like a lot, but that is a dramatic amount in 1 week. So the US dollar is getting quite weak. Now it had been quite strong recently, and I'm not going to go into that because it's super complicated and we want to keep it pretty straightforward, but just know, and I'll put it up on screen, that the US dollar is getting weaker. Now, if you're an investor that's holding a lot of US dollars and this is happening, you don't want to be losing value. You don't want to be losing your money. If you had $1 million, well, you've effectively just lost 2% of that $1 million in terms of value in 1 week. That's pretty scary, especially if you scale that up. What if you've got $10 million? What if you've got $1 billion in cash? And so that is another reason why, with the devaluing, the decreasing value in fiat currencies like the US dollar, that investors are going to want to be moving toward these harder assets, which is very likely why we've seen a decline in the US dollar and in the exact same week, an increase in the price of gold to an all-time high and an increase in silver by 10%, which is crazy in a week. Okay, so number 6, my final reason why I think there is still so much more run room ahead for, sky's the limit on these sorts of the triad, gold, silver, Bitcoin. And that is the increasing government debt. So we've looked at the central banks and we've seen they're doing all the money printing and whatnot. We've talked about bank reserves, but we haven't really talked about how a government's going to get us out of this situation. And in Australia in particular, what our government likes to do is to build infrastructure projects, build roads, build rails, build airports, build, these big, multi-year, sometimes decade-long projects that are billions and billions of dollars in order to stimulate the economy, because they want to give people jobs to build infrastructure and create things, and hopefully those people will get an income from working and then they'll start spending money and that sort of thing. So the government will use that as a tool, and the Victorian government in particular here in Australia has stated that they're going to look at bringing forward some of their previous planned infrastructure projects. Now what that means is it's just more government spending, it's more money printing, it's more creating money into existence, into the economy. Well, what does that have in common with the other 5 points that I've already spoken about? It devalues the amount of currency that already exists. So the dollars in your bank account will be worth much less in the future than they are today. The number will be the same, but the purchasing power, which is really the value, will be much less. And once again, that's just another nail in the coffin for my favorite triad at the moment. So I realize this has been a long video, but I really wanted to get these points across to sort of show that, even though the price of silver has rallied by 10%, and the price of Bitcoin's up 10%, and gold's up, probably in a similar amount in the past couple of weeks, even though that's the case, you might look at that and think, oh no, I've missed out, that wave has passed. Well, in my opinion, based on these factors and more, this is just the beginning of this triad increasing in value and this particular opportunity that we're seeing right now. I think the stars are aligning for these three. And I didn't even go into Bitcoin on this. There's so many tailwinds for crypto right now beyond what I've mentioned in this video, but I kind of wanted to keep it to these common factors that are tailwinds for all three of these investments that I'm very bullish on, as you can probably tell, and which I'm personally investing in, and I have personally been investing in and will continue to invest in. So there's a saying in the crypto space, and it is, when in doubt, zoom out. So I hope that I've conveyed that with this video, that we can just look at the charts on the short term, but if we zoom out and look at the bigger picture of what's going on, that can give us some key clues about what might be happening in the future and how we can just make, smart decisions based on that information of where things are going and the kind of bigger trends that we're seeing. So that's it from me today. Thanks for watching. If you enjoyed this video, please give it a like, and I'll look forward to speaking with you soon. And let me know what kind of other content you'd like to see. Let me know if you want to see more of this kind of content where it's, kind of recapping significant things that are going on and identifying opportunities that I'm personally seeing and that I'm hearing from the experts that I listen to. So I'll speak to you soon. Thank you.